Hey everyone, Jonathan here. Today we're going to tackle a topic that I think is often overlooked, even misunderstood, but really it's one of the most important conversations you can have about your financial future. And that's just the importance of having life insurance in place. It's simple, affordable, and really it's just there to buy a lifeline for your family if the unthinkable happens. So there's a few different scenarios I find a lot of people find themselves in. And I want to address that and kind of have a conversation on each of those reasons. One is people who don't have any insurance at all. Two is people who only have mortgage life insurance. Three, people who are solely relying on their group insurance. And the fourth is they have some insurance, but it may not be enough, which that can even tie into the other ones as well too. So I just want to kind of share that and why I think it's super essential for you to have this in place for your family to protect them. The first one, if you don't have any insurance at all. And this is actually pretty, it is somewhat common. A lot of people do have some form of life insurance, but there's still a chunk of people that just don't have anything at all. And really, if you don't have anything in place, you kind of got to ask yourself, hey, if something were to happen to me today, what would happen to the people I care about the most? If you're married, kids, really if somebody's dependent on your income, maybe you're helping out other family or financially supporting other people. If something happening to you and that loss of income would affect other people's lifestyle, you may want to look at, hey, I should probably get some kind of life insurance and see what we can make happen. Because one thing I said, if you got a mortgage in place, who's going to pay for that mortgage? If your income is contributing, helping pay for that payment, there's a good reason to have that. If you've got kids, well, I know my kids did some snow shoveling the other day, made a few bucks, but that's not enough to sustain themselves. And what are they going to do come summertime, right? So mow lawns, I guess, but not enough. They could do things, but until they get older, they're not able to be dependent or independent for themselves. They're going to be continuing to be dependent on you if they're younger. So if you've got kids, that financial support is going to help and make a big difference. Or if you're a spouse, or if you have a spouse or other dependents, just help that income helping is going to make a big difference. So the thing is, if someone's dependent on you, and you leave families behind, and there's a gap in income because you're gone, life insurance policy provides that safety net. It ensures that your loved ones aren't going to struggle to make ends meet, aren't going to struggle to get by and to survive. Really, you got to think, hey, if something were to happen to me, do I want my family's life standard of living to be better, worse, or at least stay the same? And if it's better, at least stay the same, you got to look at getting some kind of insurance in place. And you're never too young to get it as well too. I know some people are, I'm young, I got a young family, I'm young myself. Listen, the younger and healthier you are, the cheaper the premiums are going to be. So you can delay getting the insurance another year, 5 years, 10 years, but the cost is only going to go up. So kind of only hurts you in that situation. So I encourage you to take a look at that and dive in. The other one is people who only have mortgage insurance. A lot of people have this on mortgage insurance. So they got this on their credit cards, their loans, lines of credits, that kind of stuff. It's an option because it's offered to you right when you're buying your home. You're signing the papers and hey, once you do this, you get this life insurance in place, answer a few questions, and if something happens to you, the mortgage is paid for your family. Well, actually, a few years back, CBC Marketplace did an investigation, did a piece on mortgage insurance, and there were some serious pitfalls with the mortgage insurance. So one is something it only covers one person. So if you and your partner are both in the mortgage, only one of you are covered. So there's a gap in your total family coverage and your total family purpose of having life insurance. The second piece is it only covers your mortgage. So mortgage insurance is designed solely to pay off the mortgage. It doesn't help with other expenses, children's education, putting food on the table, paying for property taxes, funeral costs, your day-to-day living. You might have heard the expression house poor. You've got this house fully paid off, no mortgage, but you got no assets. So you gotta, what do you gotta do? Borrow against the house, first mortgage, sell it in order to get that money anyways. So having a house paid off that you have no income to pay for the electricity, the gas, the property taxes, the upkeep of the place is not going to put you in a good position. And the last reason why I'm not a big fan of mortgage insurance is because they do what's called post-claim underwriting. So where most insurances, you do your medical right up front, so you know, hey, do I qualify, do I not qualify? Mortgage insurance only checks if you're eligible after you've passed away. So you might have been perfectly healthy when you got the insurance, but who knows, 5 years later, 15 years later, stuff happens. Cancer, heart attack, tumor, like, any high blood pressure even. These things can affect the company saying, yeah, we'll cover you. Something, even if you didn't pass away due to that, but because you had that medical condition, they could actually deny your claim. So to me, it doesn't make sense. Why would I put my family's financial security on, a roll of the dice, so to speak? It doesn't make sense to me. That's why I like having your own personal plan that you can control, that you know it's going to pay out, that you can use that cash for whatever you want to use the cash for, is kind of the best case scenario. Now, the third one I want to look at was group insurance. Yeah, I know a lot of people that have group insurance because it's provided through their employer, and that's great. I don't think there's anything wrong with that. I think it's good to have it. It's low cost. But generally speaking, pretty much in every case, it's just not enough. And there's a few reasons why. One is it's tied to your job. So if you ever switch jobs, retire, laid off, you move to another area, things happen in our life. We're not staying with one company for 30 years is kind of unlikely in a lot of cases. So if you leave your position, you lose that coverage. But maybe you are going to stay in your position for 30 years. That's awesome. But the other reason is coverage is often limited. Group policies generally only cover 1 to 2 times your annual income. So if you think about it, if you've got young kids, say, 10, 8, 13 years old, whatever, 4 years old, is 2 years of your income enough insurance to take care of your family? Your 10-year-old's now 12. They're still dependent on you guys, So a couple years of your income is probably not going to be quite enough. A lot of people suggest, and kind of a rule of thumb is you want to look for somewhere between 8 to 12 times your annual income. That's going to give you a good number to go off of. But the other thing actually is, you can, and this isn't all policies, but I've seen some where basically if you're on like a long-term disability or you're injured for a long period of time, you begin to lose certain company benefits and they're no longer there. And you just don't want to put your family in a position where it's like, if they don't go back to work in the next couple months, we lose this life insurance and we probably should have it. You don't want to put your family in that kind of position, and you want to put yourself in that kind of position. It just doesn't add up. So I think group insurance is a great perk. But it should not be your only plan. Truthfully, I think what I tell people is you should think of it as a bonus, not the foundation of your family's financial security. So it's a great piece of there. It's extra, but it shouldn't be the bulk of it or what you fully rely on. And the fourth one, probably the most common, is, people have insurance, whether it's mortgage insurance, group insurance, they got other things going on, but they just don't have enough. Like I mentioned just a couple seconds ago, it does depend on the situation, but the reality is most people need somewhere between 8 to 12 times your annual income. And that depends on the age of your kids. The younger they are, you should probably get a little bit more, if you have mortgage or debts, you might want to look at having that stuff covered, whether you cover the whole mortgage or you cover the payments of it. There's a few different strategies, when you're working with a professional, they can look at to make sure, it can fit within your budget. But then also your spouse's needs. Sometimes, yes, you have 2 spouses working, but maybe one spouse is the main income earner. Well, they should probably have a little bit on the higher end. The other spouse might not need as much of that income. Maybe it's part-time work or things like that. So they still need insurance. They still need that protection to take care of the family. However, it's not critical to making sure the bills are paid every month. It's going to help take care of time. I know a lot of kind of what I'm leaning towards is sometimes, I guess, the main breadwinner and the other person, they work part-time, but they do a lot of work around the house, making sure the kids are in school, cooking, or just kind of doing stuff around the house that maybe doesn't earn a direct income, but it's tremendously valuable for the lifestyle that you're living. So having that insurance can help ensure that maybe you need to hire a part-time nanny or help family move in or different things different things that can help with that side of things. And the truth is, I've had my clients that had life insurance and they passed away, and I've never had any client that I sat down with say, this is too much life insurance. I've had the opposite say, hey, I wish we got more. And it's just like, hey, you don't want to put your family in a financial straining situation if something were to happen. It's just there. Again, I'm not saying you need to have tens of millions of dollars.